Forbes India cover story podcast series in association with theindicast.com. My name is Abhishek, and this issue's cover talks about one of the biggest names in among venture capitalists. It's Sequoia Capital or Sequoia India in this case. And joining me on the call to talk about his cover is Sayan Chakraborty. Hi, Sayan. Thanks a lot for joining.
Hey Abhishek, thanks for having me over.
How big is Sequoia in India vis-a-vis its competitor? Sure. Let's start with that before we dive into your cover story and what are some of the big investments?
Sure. So, Abhishek, to begin with, Sequoia India manages $4.5 billion. And to give you some perspective of it, if you take a few of the other big firms in India, like say for instance Axel, SAF, and Matrix, Sequoia's AUM will be far more than these three combined in India. So they're by far the biggest in India among venture capital firms.
What is Sequoia's philosophy here in India? In that, do they follow the same methodology where they probably invest heavily in startups at an early stage, or how does that work here?
Sure. So, truth be told, Sequoia's philosophy in India isn't, way different from what it has been in the US or in China. So, Sequoia has traditionally invested in, early stage technology companies. Like, if you take some of their bets in the US, for instance, like Apple, WhatsApp, Instagram, Oracle, Palo Alto Networks, all of these have been mostly early stage bets. So if you look at Sequoia's journey in India, they kind of entered India with an association with Westbridge Capital Partners, which was a homegrown venture capital firm. As it happened in India, the early days of Sequoia under the Westbridge team were spent in more public market investments and growth capital than early stage technology deals. Things changed since 2011 when the Westbridge management kind of moved out of the firm to relaunch Westbridge and Sequoia under the current leadership and a few others who kind of have since left the firm. They started slowly and gradually veering towards technology companies.
And to talk about the central theme of your cover, you write that Sequoia Capital India advisors had written checks of all sizes from seed to growth and never lost sight of an exciting company. And but liquidity and exit concerns remain. How do you why do you suggest?
Early stage checks certainly, I mean, they're Sequoia's bread and butter, or at least that is what they claim to be, and they have also been writing growth checks. Say, for instance, if you take a few of their recent investments like say Blackbuck or Fresh Desk, these were all growth investments by Sequoia. So that is one part of it. And when it comes to liquidity, we should look at Sequoia's fund size as well. 4.5 billion is a mammoth fund. And if you have to kind of take into consideration in venture capital, they ideally settle for about at least 3 to 5x returns per fund. The quantum of money that Sequoia needs to return is humongous by that yardstick. It's not very easy to return that kind of capital given the way India has panned out. Say, for instance, if we take Flipkart, which is considered to be the biggest exit in India so far, and then there are diverse views about it, right? I mean, some people may believe Flipkart could have done better, could have gone for an IPO, and the returns were suboptimal. Suboptimal in the sense, it could have done better. So if that is what happened to Flipkart, then there is always a question on how Sequoia's bets will play out in India. But even there are multiple modes of exits these days, and you never know where it is coming from. And Sequoia stands to benefit because all of said and done, they are sitting on a few very amazing assets where their holdings are like close to $1 billion and stuff like that. So there is money to be made, but yes, liquidity remains a concern. But there is an opportunity. It's not like a debt fund, there is no way out for them.
You also write about some of the missed opportunities. What are some of the missed opportunities for Sequoia where they let an idea or a founding team or a startup go and it was snagged by competing firms?
One would be delivery, which is now valued at $1.6 billion. Then there was Fresh Desk, which is again $1 billion valuation company. But Sequoia made amends, to be fair to them. They came back and invested in Fresh Desk in the growth round. they invested in Black Buck. They passed on Rivigo, for instance, which is a trucking company. They passed on Black Buck as well in the seed stages, but they came back and invested in Black Buck in the growth stage. So what happens with these most of these companies are their investment thesis also evolves. Like at one point in time, maybe 3 years ago, the investment thesis didn't support such business models. Such business models didn't look attractive. Let's put it this way, for any reasons. Maybe the market didn't look very attractive, or maybe the businesses were dependent heavily on e-commerce or things like that, or whatever. Or maybe they found there wasn't enough technology in the businesses. But then, as they saw these companies evolve, the markets have evolved, they kind of stepped in and wrote a check. So that is something very interesting about Sequoia is like, they don't shun sectors per se. Maybe they would have passed on a few, but once they saw the sectors have matured and, investing there made sense, they did write a check.
But then if you miss the bus, would that mean that you have to pay that much more to be the follower?
Yes, yes, that does happen all the time in venture capital, I guess. But they have missed a few buses, but they have boarded many more buses, if we
Right,
may put
right.
it that way. So I guess we need to kind of give them the due for that also. But I guess some of them must have been expensive misses, and but that happens all the time.
Right. And what prompted, I'm curious to know what prompted this cover story in that, what was your original brief, or did you set out to investigate in this one, and what did you eventually find out? Because it's a big space, or rather, there are only a few big companies, and by definition, venture capitalists are a little reluctant or cagey to reveal what actually happened. So, what was your brief? How did you get started on this one?
So, to be very honest, the reason we picked on Sequoia was very simple. Sequoia is by far the biggest venture capital firm in India, and the fund size is bigger than three other big funds taken together. So, I guess that tells a lot. Like, managing $4.5 billion in a market like India, which people believe there are diverse opinions about India. There is one school of thought which says like India market is not deep enough to kind of absorb that kind of capital, and sundry thoughts. But Sequoia has kind of raised such large funds, and they have managed to raise such funds time and over again, which shows like the investors, the limited partners also have enough faith in the fund. And then if you look at their investments, like I understand they aren't there in a Flipkart, or they haven't kind of subsequently invested in Oyo after writing a first check. But then look at the companies they are in. They are in Zomato, they are in Oyo. Look at their Southeast Asia bets. Like, that particular Sequoia Capital India has invested in 11 unicorns across India and Southeast Asia. So Sequoia certainly is different in terms of both scale and the way they operate.
Right. And last one, how do you see them panning out in the next couple of years or so?
See, their focus is certainly on early stage and technology investments, but that's it, and that is reflective in some of their initiatives like Insurge. And then they have a growth investment team as well, which is led by G.V. Ravishankar. So that bit is certainly there. But again, like the way we see it, or the way Sequoia Capital sees it, is India is an exciting market. They will keep continuing to pick interesting companies, but all said, there is this concern about exits as well. Something that Sequoia is not concerned about, because they say their investors, their LPs are long-term investors who would like to stay invested in the fund for like 15, 20 years. That's certainly there. But overall market perception, if you look at it, at some point in time, you have to show some hard cash to your investors. Valuations are notional. But to be fair to Sequoia, they have started doing secondaries. Like, they sold stakes of about 180 million worth in Byju's, 150 odd million worth in Pine Labs. And Pine Labs is one of their seed investments from the 2008-9 vintage. To sum it up, early stage technology deals is their bread and butter. India looks like a promising market. That is why they have been raising funds to kind of back companies here. Then there is this issue about exits which they need to handle.
I think in the interest of time, we will wrap this up. Thank you very much, Hayan, for your time on this.
Cool, man. Thanks a lot.
Thanks a lot. And all you listeners, you can get this podcast on ForbesIndia.com and on iTunes. And to have someone call you for a subscription, message Forbes to 51818.